Can Puregold turn Philippine grocery retail into pure gold? Welcome to the Valuation Master Class case study, where you'll learn about interesting stocks and how to value them. What's interesting about P Gold is that it trades at a 55% discount on 2022 PE compared to its sector. This is Andrew Stotts of Valuation Masterclass. Let's get started. Remember, this information is for learning purposes only. This is not investment advice or a recommendation. Puregold is in the consumer staples sector in the Philippines. It is one of the top 3 largest grocery retailer chains in the Philippines, operating hypermarkets, supermarkets, warehouses, and specialty stores. There's 3 things that we're going to cover about this company. Number 1, the aggressive expansion to lay the foundation for massive growth and resilient business model in low penetrated industry. And industry consolidation could enhance gross margin. The key statistics, well, there's 11 analysts covering this company, and they have a target price of 52 Philippine pesos. That's a 6% upside and a buy. And it's trading on a PE ratio of 13 times and a dividend yield of 0.7%. My value estimate for this company is 62 Philippine pesos. That's an upside of 72%. That is a big upside. So where am I coming up with such a massive upside? Well, first, let's understand the company's revenue structure. Supermarkets and hypermarkets make up 76% of revenue of Puregold, and you can see one right there. Membership shopping through its company, SNR Membership Shopping, makes up 22%. Concessions is just a small 1%, and membership also a 1%. Now, 34% of the revenue is coming from Metro Manila, and 26% from Luzon, and 28% from South Luzon. Those are the main areas. Now, the price has turned bearish. In 2021, P Gold share price ended almost at the same level that it started the year. Most recently, the share price at about 37 right now, recently declined. And the 50-day moving average has fallen below the 200-day moving average. However, volume RSI moved above the 50% line, which could provide some support to a turnaround of this bearish trend. But even if there's not an immediate turnaround, there's still a lot of upside here. So what's the story? Why am I so positive? Well, first is the aggressive expansion to lay the foundation for massive growth. Between 2011 and 2020, P Gold increased the number of stores from 102 to 469, which is more than 4 times increase. Over the same horizon, the revenue also saw a 4 times increase. And this proportional increase suggests that P Gold's revenue story is mainly quantity driven. Can they put up more stores? So to drive growth, they've got to expand. Now, there's been a strong commitment to growth that could lead to positive surprises. The company had opened 50 stores in 2018, but only 30 in 2019 and 41 in 2021. For 2022, management targets opening 37 stores, that's 25 Puregold and 12 SNR stores in low penetrated areas. Given its strong cash position, this could surprise on the upside. Now, let's see how I incorporated this story into my forecast. P Gold's main revenue driver is the number of stores it can add to its portfolio. And here I have forecasted that the company can add on average about 40 stores over the next 3 years, which is slightly higher than management forecast. That means that by 2023, they're going to have 498 Puregold stores and 92 SNR stores. That would give them a total of 590 stores. Now let's talk about this resilient business model in a low penetrated industry. Puregold branded stores cater to low to middle income consumers. It follows a low-cost leadership strategy, as Michael Porter taught us. Modern retail penetration in the Philippines is about 30%. In Malaysia and Thailand, it's around 50%, so there's plenty of ways to go in modern retail trade. In Singapore, it's roughly 70%. Now, given the low penetration in the Philippines, the market should not see any constraints to growth. So let's look at how I incorporate this into my forecast. What you can see here is that during the pandemic, Puregold recorded lower foot traffic, but a higher average ticket value as consumers bought more items per visit. And the total traffic went down from 189 million down to 138 in 2020. So 189 in 2019 down to 138 in 2020. And what we can also see is that the average ticket price increased from 795 in 2019 up to 1220 Philippine pesos. So getting close, let's say, a 50% increase in the average ticket size. Well, during the pandemic, people didn't go out of their houses much. So when they did, they loaded up, and we can see that in these numbers. But I expect that these numbers are going to start to reverse. And as they do, we'll see revenue rising. So let's talk about industry consolidation and how it could enhance gross margin. The top 3 grocery players in the Philippines start with SM Retail, which has revenue of 297 billion Philippine pesos and about 3,000 stores. Now, Robinson's Retail Holdings has revenue of about 150 billion, so half of SM Retail, and about 2,160 stores. And then there's Puregold with 169 billion in revenue, so more than Robinson Retail, but with only 469 stores. The Philippine grocery retail market is still fragmented, but starting to consolidate. The biggest competitors have been engaging in material M&A activities to operate more stores under their own brands. Puregold responded with several acquisitions over the year. In 2012, they bought S&R. In 2015, they bought Budget Lane. And in 2017, they bought B&W stores. Now, they are cashed up, so if another opportunity comes, I expect that they would take it. So let's now look at the scaling effects starting to show with store expansion. So I've made a chart of gross margin here of Puregold, Robinson Retail, and Siam Macro in Thailand. Now, Puregold's closest competitor, Robinson Retail, has maintained a gross margin about 5 percentage points above Puregold's 15% gross margin. Robinson has 4 times more stores, which drives down the supply chain costs. Now, as stores increase, Puregold could be able to improve its margin by maybe 3 to 5 percentage points. Now, Philippine retailers do well compared to Thai peers. In this case, I'm looking at Siam Macro, which has an 11% gross margin in Thailand. Now, it's a little bit more of a wholesaler, but I would say it is somewhat of a good comparison. So how did I incorporate this story into my forecast? Well, you can see my forecast. I am forecasting that, first of all, we can say that gross profit margin was about 14.7 in 2020. And I'm expecting it to go to 15.2 in 2021, which we're almost done with, or which we are done with. We just haven't seen the results. And then 2022 at about 15.2, and then moving up to 15.5. So I'm expecting a small amount of increase in the gross profit margin. I'm not expecting the 3 to 5% that I think they could do. Now, scan this QR code or click the link to go to valuationmasterclass.com blog to download all case studies for free. So let's now look at the FVMR scorecard, which measures attractiveness relative to all other companies in that market. We base the score on 4 elements: fundamentals, valuation, momentum, and risk. And we rank the company from 1, which is best, to 10, which is worst. So strong profitability is driven by high turnover. Let's look into more detail here. We can see that fundamentals are a key driver to this company. And we can see a couple things here. First of all, the return on equity is slightly above the average for the Philippines. In the past 12 months, it's at about 12.4%. The recurring net margin of this business was at 4.4% before the pandemic, and it rose to 4.8% in 2020 during the year of the pandemic. And in the past 12 months, it's now up to 5.4. So the company has been improving its net margin, and that is bringing up the return on equity. So recently I created a short online course explaining my FVMR investing approach. I usually sell it for $97, but for a limited time, I'm offering it for free. Just scan the QR code or go to the link below. Let's talk about the forecast. There's 11 analysts, and they have a 46% upside. Most have a buy recommendation as the company continues to deliver on its expansion plans. Consensus is rewarding management's effort by forecasting high growth from 2022 onward. Also, analysts assume a slightly higher margin compared to the past. So let's go through the P&L. Profit and loss, well, revenue stayed flat in 2021, and it could continue to see high growth going into 2022 and onwards. There's new stores opening, and foot traffic should normalize. This balance sheet, the asset side of the balance sheet, is very defensive. We can see that 1/4 of its total assets are in cash, which is good when it's time to play offense and start buying assets. Net fixed assets grew in line with annual target for store openings. Basically, this company is highly efficient in the amount of revenue that it's generating relative to the assets it has in place. Let's talk about liabilities. I don't expect the company to accumulate more debt over time, as it has a high cash generation ability to fund growth internally. Yes, I see a note from Lee Wrigglesworth, who says he's showing a rocket taking off. And Thibaut, it's nice to see you. Welcome to everybody that's listening in, and feel free to ask any questions that you may have. Now, like most retailers, P-Gold has strong asset turnover of 130 to 150, which means that sales grow faster than assets. This measure should start to recover as revenue recovers. Now, scale effects is starting to show up. We expect it to show up in the gross margin over time. And I think that it could rise from this 15% up to maybe 17 to 20%, like Robinson's retail. But I haven't forecasted it in too aggressively into the forecast. Now, if you want to learn how to value companies like this, check out my 6-week Valuation Master Class Bootcamp. Class starts on March 7th this year. It's practical. You're going to learn practical skills for valuation. You're going to access the tools and tips and tricks that I use to become a #1 analyst. You're going to join a group of inspiring, like-minded financial professionals and get a job through my network of thousands of financial industry leaders. You can save $402, yes, $2, until February 28th. And just scan this QR code or learn more, or just go to the valuationmasterclass.com/bootcamp. Let's go into the valuation. I'm going to review the A-Stot's investment research stock picking checklist. It was inspired by Peter Lynch's book, which I keep by my side all the time, One Up on Wall Street, where he talked about 10 baggers, stocks that go up 10 times. We did extensive research on 10 baggers and found 9 factors that drive long-term share price performance. The question is, can this company be a 10 bagger? The first thing on the list is #1, management is committed to growth. That's good potential. Between 2011 and 2020, the company's revenue grew 4 times. #2, growth can hit double digits. That's also good. Modern retail is still underpenetrated in the Philippines, supporting good growth. #3, gross margin can remain high. This is good. There's plenty of room to increase its gross margin over time by maybe 3 to 5 percentage points to get up to the industry leader. #4, earnings are predictable. This is good. Net profit has been stable and growing in line with revenue. 5, efficient at deploying assets. Good. Asset turnover is about 150%. So that is above average. #6, cash flow cycle is low. Cash conversion cycle is low. This is moderate. Cash conversion cycle is 30 days, in line with the industry. #7, cash flow is consistently positive. Good. Since 2017, P-Gold delivered strong operating cash flow, which can easily cover investing outflows. #8, capital is readily available. That's moderate. Leverage is relatively low. Net debt to equity stood at about 0.2. So you could say it's moderate to good. In fact, they may have good access to capital. And number 9, valuation is reasonable. Well, this is really good because there's a massive discount to Philippines consumer staples sector, despite higher EPS growth and similar ROE. So, ladies and gentlemen, can this company be a 10-bagger? Well, there's a lot of goods. There's no bads, and there's a couple moderates. My conclusion is it has the potential to be a 5-bagger. A 5-bagger is an impressive opportunity, but probably not 10-bagger. So let's talk about the free cash flow. Since 2017, Puregold delivers consistent positive free cash flow to the firm and should continue to do so over the next few years. I expect faster revenue growth than consensus at Puregold's, as Puregold's balance sheet can finance this fast growth. So I'm expecting 9% in revenue growth compared to the industry's consensus 6.4. I'm also expecting that net margin can come up to about 5.3 versus the industry's 5.0. And I don't see any constraint as to why Puregold could not close the gap in margin to its competitors over time. Again, I'm not including that in the next couple of years, but over time, I think they can get there. So let's review some of the assumptions I've made in the free cash flow to the firm valuation method. Basically, the cost of equity I'm saying is about 10%, and the WACC is about 8.3 because the company doesn't have that much cash or that much borrowing, and also interest rates are very low. Also, I'm expecting a 4% terminal growth rate. Remember, Philippines has got more than about 100 million people in population, and the average age in the Philippines is very young in Asia, something like 26 to 28 years old compared to Thailand at about 40 or 45. So it is a young, and there's a industry or young country with a young industry that has a lot of opportunity to penetrate into modern retail. Of course, you may say, well, Andrew, what about the traffic in the Philippines? Yeah, that's a nightmare. So logistically, there's challenges. So I just take a break to say thanks to everybody who's made a comment. And I see Jason there. I appreciate that. We keep trying to improve these videos to make them better. And it's also what we're teaching in the Valuation Master Class Bootcamp so that students will get to know what the format looks like. And Satawat says, this company seems very impressive considering the potential in the grocery industry. I think you're right. In fact, Thailand is kind of a case study on that. Okay, so my value estimate is 62 Philippine pesos. That's a 72% upside. The bull case is 100% upside, and the bear case is a 42% upside. This stock, to me, looks interesting. Now let's consider the company's world-class benchmarking scorecard to identify the company's competitive position relative to global peers. We use a composite rank of profitability and growth that we call profitable growth, and a scale from 1, which is best, to 10, which is worse. And here, what we show is when we look at the company's profitable growth score relative to 590 large consumer staple companies worldwide, it is ranked as a 4, which makes it slightly above average. And this has been very, very stable. This is driven by a rank of a 4 in profitability. That's the return on assets, which could improve if the company can increase its margin and get more out of existing assets. And growth has been a 4 recently, very stable. And obviously, if they can ramp up that growth, there's an opportunity there. So what are the risks? Well, the key risk is lower than expected growth. Failure to execute its growth strategy is a key risk. Industry consolidation could intensify competition, and limited ability to pass on higher costs as Puregold targets low income segment. So go Puregold. Yeah, and there's a comment. So the main thing is that if it can't live up to my expectations on growth, then it's less attractive. But the point that I would make is that even if that's the case, we're still talking about a 40% upside in my bear case. So the conclusions: expansion could progress faster than the market expects. If Puregold can increase its gross margin to its competitors' level, it could provide a solid upside in earnings. And the valuation is surprisingly cheap as it trades at a 55% discount on PE. So I'm going to wrap this up by asking you the question that I started with, and that is, can Puregold turn Philippine grocery retail into pure gold? I'd love to hear your thoughts in the comments below. Have a great day.